Hey guys, it's Doc's Market Minute for Thursday, May 21st. What I want to show you today is how understanding what's going on with the price chart and being able to read these fractal energy values on each time frame can allow us to gain some edge based on what's happening on the different time frames. Now, when we look at a stock like CTRP, and we looked at this weekend, we see an uptrend in the monthly chart, right? We see on the weekly chart, we see the price exploding higher. And again, we don't have the benefit of knowing about this little red candle here this weekend because this is printed so far this week. But what we saw was a stock just exploding higher, right? And so on the daily chart, even the same kind of uptrend. So obviously all the trends are heading higher. Everything looks good in terms of the bullish case for CTRP. Now, what we do is we look at the energies of each of these time frames. And what the energies are showing is the linearity of the last 14 bars, with an extremely linear trend taking a lot of energy out of a stock. Think about this. If you were to climb a mountain, if you were to sprint up the side of a mountain, how tired would you be after a certain amount of time? And understanding this lets us know that on a weekly and a daily chart basis, after this big gap higher, this stock was absolutely exhausted. Think about this. If you were to run up that mountain and you got to the point where you were just gasping for breath, what are you going to do? Are you going to fall back down the mountain? Maybe, if you're that tired. More than likely, what you're going to do is you're going to rest. You're going to just grab your sides, bend over, and take some good deep breaths, and you're going to just rest at that point. And this is exactly what typically stocks do as well. They rest in a certain area. Now, if we know this about the character of stocks when they move, what kind of a trade can we place to take advantage of that behavior? Well, that would be an iron condor or a calendar spread or something akin to that. Now, here's the deal. I don't expect this to stay like this for very long. In fact, I don't expect it to stay like this for more than about a week before the existing trend kind of takes hold, or it might even see a gap fill on here. So what I want to do is get into the trade, get my fair share, get out. So on Monday, we entered an iron condor on this trade. And here's how this trade would look like on a risk graph. And this is the expiration risk graph. Now, what's important is that when we have this little amount of time to trade, just a few days on this, is that we set up our risk management on the trade from day one. So with weekly options like there's no tricks that you can play with this. There's no fancy adjustments or any kind of delta hedging or gamma hedging or anything that most people can effectively do without getting whipsawed to death with just a few days left on this. So I think it's very important that you set up your risk management from the initial entry of this and just let it play out. Set up your limit order. In this case, what we did was we set up our limit order for a 24% return, and it took us from Monday to this morning to get our 24% return, which I think is okay. It's not bad for 3 days to get a 24% return. Keeping the position size small so you can sleep at night through these positions. You're not going to stress out if this thing goes way down there to fill that gap or explodes higher, which any stock can do. So hopefully this gives you some ideas of how you can use the different fractal energies here, understanding how price really moves and how we can marry that knowledge to find edge in an option strategy that can take advantage of that. So whether it's either expanding or contracting, like it did in this case, we can find all types of different trades to be able to take advantage of that. That's it for today's Market Minute. Thanks for listening. We'll catch you tomorrow.